Everyone is telling you the Clarity Act will send XRP to the moon, but nobody is telling you how to actually position yourself before it happens. I spent the last 72 hours breaking down the exact accumulation framework that institutions are quietly using right now, while XRP sits at $1.44. This is not a price prediction video. This is your step-by-step playbook. 5 phases. 1 goal, let me show you. Here is the reality nobody wants to admit. You have probably watched 10 videos this week about the Clarity Act, about the Senate vote, about how XRP could hit $3, $5, $8 by year end. And after every single one, you closed your phone and did absolutely nothing. Not because you do not believe it, you believe it more than ever, but because conviction without a plan is just anxiety with extra steps. I know this because I have been there, sitting on a position, watching the price bounce between $1.15 and $1.50, paralyzed by 2 questions. Should I buy more now or wait for a dip? And if it pumps tomorrow, did I miss my window? That paralysis is not your fault. It is by design. Most content creators give you the destination, but never hand you the map. They tell you XRP could change your life, but never explain how to structure entries, when to scale in, or what signals to watch. Today that changes. Before we get into it, if you are serious about your XRP journey, smash that like button right now, drop a comment telling me how many XRP you are currently holding, and subscribe, because we are putting out daily XRP analysis that goes deeper than anyone else on this platform. Let me set the stage so you understand why the next 60 to 90 days could be the most important accumulation window in XRP history. On January 29th, the Senate Agriculture Committee voted 12-11 to advance its version of the Clarity Act. That is the first time a crypto market structure bill has ever cleared a Senate committee. Let that sink in. This bill would officially classify XRP as a non-security under federal law. It puts XRP on the exact same regulatory footing as Bitcoin and Ethereum, the same legal classification that unlocked hundreds of billions in institutional capital for those assets. But here is where it gets interesting, and here is what most channels are not covering. The bill still has to clear the Senate Banking Committee, and that is where things get complicated. There are over 130 proposed amendments still on the table. The stablecoin yield debate between banks and crypto companies is unresolved. Democrats want ethics provisions blocking politicians from profiting on crypto, and Coinbase's CEO pulled support over concerns about tokenized equity bans and DeFi restrictions. So what does this mean for you? It means we are in a window where uncertainty is suppressing price, while the underlying fundamentals are the strongest they have ever been. 7-spot XRP ETFs are now live in the United States. Combined assets under management crossed $1 billion as of February 8th. Those ETFs went on a historic streak of consecutive inflow days with 0 net outflows since launching, while Bitcoin ETFs bled over $1 billion in December and Ethereum lost over $500 million. XRP funds kept absorbing capital. Now here is a curiosity driver I want you to sit with. What happened the last time a major crypto asset got official commodity classification and ETF infrastructure at the same time? Bitcoin went from 40,000 to over 100,000 in under 12 months, and XRP's market cap at ETF launch was roughly 1/8 of Bitcoin's at its own ETF debut. The math on capital velocity alone is staggering, but I am getting ahead of myself. Let me walk you through the framework. I am about to break down the 5 phases of what I call the Clarity Cycle Accumulation Framework. This is not financial advice. I am not a licensed advisor. This is an educational framework based on how institutional capital historically positions around major regulatory catalysts. What you do with this information is entirely your decision. Phase 1, the noise zone. This is where we are right now. XRP is trading around $1.44. The Clarity Act is advancing but faces resistance. Headlines alternate between extreme bullishness and doom. Most retail investors are frozen. They want to buy, but they are scared of a rug pull. They want to hold, but they are tempted to sell every red candle. The noise zone is characterized by sideways price action with violent wicks in both directions. Historically in crypto, this is when institutions accumulate the hardest, and the data proves it. Exchange-held XRP balances dropped to 7-year lows of 1.6 billion tokens by January. Someone is buying and moving XRP off exchanges into cold storage. That is not retail behavior. That is institutional conviction. The strategy in phase 1 is what I call whisper accumulation. Small, consistent positions rather than large lump sums. Think of it like dollar cost averaging, but with intentional scaling based on specific price zones rather than fixed calendar dates. Phase 2, the catalyst confirmation. This phase triggers when the Senate Banking Committee either schedules its markup or the White House announces an alternative pathway like the skinny bill approach some analysts are discussing. You will know phase 2 has arrived because trading volume will spike before any price movement. Institutional desks do not buy quietly when regulatory certainty improves. They buy aggressively. The signal to watch is not the news itself. It is the on-chain data. When exchange balances drop sharply over a 48-hour period while spot ETF inflows surge above their daily average, you are looking at phase 2 confirmation in real time. The reason I am telling you this now is critical. By the time the headline hits your Twitter feed, phase 2 is already halfway over. The institution's already positioned. The retail FOMO has not kicked in yet, but it is about to. This is historically where the biggest percentage gains begin. Quick pause. If this level of analysis is helping you see the XRP landscape differently, hit that subscribe button and turn on notifications. I break down these frameworks daily so you are never caught off guard. Drop a comment below telling me which phase you think we are in right now. I read every single one. Phase 3, the breakout compression. This is where things get volatile. Once regulatory clarity passes in any form, whether it is the full Clarity Act, a skinny bill, or an executive action through Project Crypto, XRP enters what I call breakout compression. Price moves fast, corrections are sharp, and most retail investors get shaken out because they did not plan for volatility. Here is the historical pattern. When the SEC lawsuit settlement was confirmed in August 2025, XRP surged over 30% in a week. Then it pulled back 15%. Then it surged again. 80% of retail traders who bought the initial spike panic sold during the pullback and missed the larger move that followed. The framework for phase 3 is simple. If you accumulated properly in phases 1 and 2, phase 3 is about holding, not buying. Your average cost basis should be low enough that even a 15 to 20% correction keeps you profitable. This is where preparation separates wealth builders from gamblers. Phase 4, the institutional flood. Phase 4 is when the floodgates open. This phase occurs when regulatory clarity combines with ETF infrastructure to create what analysts call a structural demand shift. This is not speculation. This is exactly what happened with Bitcoin in 2024. Once institutions had regulatory certainty and ETF access simultaneously, the capital inflow was relentless. For XRP, Phase 4 has unique characteristics. Ripple just secured a full EU electronic money institution license in Luxembourg on February 2nd. They have conditional OCC approval for Ripple National Trust Bank. They have applied for a Federal Reserve master account. And this week, on February 11th and 12th, Ripple is hosting XRP Community Day, where CEO Brad Garlinghouse is presenting under the theme The Era of XRP in Capital Markets. When banks can custody XRP natively, when ETFs are absorbing supply daily, when the legal classification is settled in statute, and when Ripple has direct central bank access, you are looking at a fundamentally different asset than what exists today. The price targets analysts are throwing around, $3, $5, $8, those are based on this phase materializing. Phase 5, the distribution decision. This is the phase nobody talks about because it is not exciting. It does not get clicks. but it is arguably the most important phase of all. Phase 5 is when you decide your exit framework before you need it. Most investors have an entry strategy, but no exit strategy. They ride gains up and ride them all the way back down because they never defined what success looks like. Phase 5 is about setting personal benchmarks. At what price do you recover your initial investment? At what price do you take partial positions? At what price does your life materially change? I am not going to tell you when to sell. That is your decision based on your situation. But I will tell you this. The people who build generational wealth are not the ones who buy the best. They are the ones who plan the best. Having a written framework for when you take action removes emotion from the equation entirely. Now let me address the elephant in the room. The biggest mistake I see in the XRP community right now is what I call the all or nothing fallacy. People believe either the Clarity Act passes perfectly and XRP goes to $10, or it fails and everything crashes. The reality is far more nuanced. Even if the comprehensive bill stalls, there are multiple pathways to regulatory clarity. The Senate Agriculture Committee has already advanced its version. The White House is actively hosting meetings to find compromise. City analysts published a report on January 30th stating they see the passage of the Clarity Act as the essential catalyst for advancing digital assets, while also acknowledging that alternative approaches like executive action or a stripped-down version remain viable. And here is what is truly powerful. Regardless of the legislative outcome, the infrastructure is already being built. 7 ETFs are live. Institutional custody solutions exist. Ripple's cross-border payment network is operational. The RLUSD stablecoin has over 37,000 holders, with its market cap surging over 1,800% in under a year. Even in a worst-case regulatory delay, you are accumulating an asset with more real-world utility infrastructure than 99% of the crypto market. The framework works whether the Clarity Act passes in March or December because it is based on structural positioning, not timing a single event. Let me give you the data points that should be on your radar every single week. First, ETF net inflows. As long as monthly inflows stay above $250 million, the structural demand thesis holds. Any month that drops significantly below that number is a signal to reassess. Second, exchange balance trends, currently at 7-year lows. If exchange-held XRP continues declining while price stays flat or drops, that is accumulation, not distribution. That is bullish. Third, the Clarity Act timeline. The Senate Banking Committee markup is the next critical milestone. Watch for scheduling announcements. The White House has been pushing for resolution, and Citi noted that lawmakers are expected to keep working even during a potential government shutdown. Fourth, Ripple corporate milestones. The February 11th Community Day event could reveal adoption metrics that reframe the entire investment thesis. The Fed Master Account application status is equally significant. Fifth, on-chain whale activity. Large wallet accumulation patterns historically front-run major price movements by 2 to 6 weeks. When wallets holding over 1 million XRP start increasing their positions in clusters, pay attention. I want to leave you with something that goes beyond any framework or data point. The real accumulation strategy that nobody is telling you is not about price zones or technical levels. It is about conviction married to discipline. The people who changed their financial futures with Bitcoin did not do it because they timed the bottom perfectly. They did it because they had a thesis, they had a plan, and they executed consistently while everyone else was debating whether it was too late. XRP is sitting at $1.44 today. There are 7 ETFs live, 1.4 billion in institutional inflows, a major regulatory bill advancing through Congress for the first time in history, a company building direct banking infrastructure with central bank access, and a community day this week where the CEO is framing XRP as the future of capital markets. The question is not whether the opportunity is real. The question is whether you have a framework to capture it. If this breakdown gave you clarity, Smash that like button so hard your phone feels it. Drop a comment telling me which of the 5 phases resonated most with you and why. Subscribe and hit the bell because tomorrow I am breaking down the exact on-chain signals that precede every major XRP move. You do not want to miss that one. This is not financial advice. This is education. What you do next is up to you, but do something because the window does not stay open forever. I will see you in the next one.